All right, welcome everyone to today's live trading room with The5ers, which is me and Victor. Alex is not here today. Alex has very important business going on for Alex. It's probably scalping gold, watching our live stream for yesterday, trying to figure out how to survive all the wicks. How are you doing, Victor?
I'm doing fine. How about everyone? Everyone at home or wherever you may be watching us. How's your day going?
Wild coffee from Ethiopia is the best coffee in the world. So I have this coffee subscription. So I get sent to me like freshly roast coffee once every month. And this time around, they have a beautiful wild coffee from Ethiopia. Oh, I love it. I love it. But
what do you like about it? Is it the aroma? Is it the taste?
Oh yeah, like it's very fruity. It's very fruity. It's very but it's not. It's like it's very dark roasted. So it's almost like a fruity espresso-ish, and that tastes so good. It's just amazing.
Good.
Yeah,
I'm actually, I like a good cup of coffee as well. I'm passionate about coffee as well. I can't live without my coffee.
Yeah, I love coffee, man. I love coffee. I'm a bit of a coffee nerd, honestly. I'm actually, you know what I'm doing? I'm actually ordering a had a payout the other day, and I'm ordering a coffee roasting machine. I think
Nice.
it's like a seven or $800. Basically it's like a oven, and then you have like a rolling thing inside, and you put the beans in, like fresh green beans, and you roast it your own.
And can you add stuff to them to make your own aroma? Like add, I don't know, like.
Well, I'm thinking. So I have a friend who has contacts with like a Swedish whiskey manufacturer. So I'm thinking I'm going to call them. I'm going to order a couple of barrels, empty barrels of whiskey, and I'm going to store the coffee beans in the whiskey barrel and then roast them. And I'm thinking like trying different things, maybe like smoking the beans before roasting. Like there's lots of interesting things.
Nice.
Maybe not Portuguese coffee. I'm gonna write that up right away. I have never tasted Portuguese coffee. I'm gonna write that up right away, and I'm gonna order that after the live stream. Okay, so today it's we're not going to talk about coffee all live stream on obviously. So don't worry about that. We're going to talking about risk management. So guys, I want you all to type in the comments, how many % of your account do you risk per trade? Or is that even a reasonable way of looking at it? Maybe you're risking like Victor is going to talk about, he calculates his drawdown, and he will risk part of that drawdown per trade. Let us know in the comments what type of approach you guys are using. All right, we got Andrew Tate in a live stream as well. Hello there. Maybe we should talk about cigars instead. All right, so Victor, it's this live stream is it's all about your risk management strategy that we're going to be talking about, and I'm honestly very excited about this one. I'm because I think your way of looking at risk management. I mean, my way of looking at risk management is very simple, but it definitely has its flaws because I'm not taking into account my system's drawdown, which you are, and you're very focused on the drawdown. So for me, it's going to be very interesting because I want to see how I can approach how I can implement your mindset when it comes to risk management into my own type of trading. So I'm going to be the student today, and you're going to be the mentor. And hopefully you guys in the comments have a lot of questions to Victor about this as well, because I know I'm going to have a lot of questions. So please help me out in the comments and prepare your best questions. And I think what we're going to do first is maybe we can pull up, or maybe you can pull up gold and you can see, we can show people what happened on the gold trade from yesterday, because as you guys know, we had a live trading session yesterday with gold, and we ended the live stream yesterday with a drawdown, but Victor had a beautiful trade when we ended the live stream, and it hit that target, and we're now in profit on that account. And so I want to share my screen first, and then maybe you can prepare your screen while I do that.
I have mine ready. Anytime you're ready.
So this is the overall swing short I had on gold, and I think it's quite obvious. It's quite the obvious trade here for me, because you look at the daily, and this is just it's a very clear break of structure here on the daily. You see, you have this previous range. I did think that this range we're going to continue for a bit longer, but you basically see range lows and then range highs in the middle of the range. Now, it's not perfect, but it doesn't have to be perfect. But that's the range that I was looking at, and then we had that support area around this level right here. You can see our price kind of used it as support and a resistance up to range low, used as resistance again. So on the 4 hour, it might not look that perfect, but basically what I'm looking at is a uptrend, range, distribution range, break of the range, retest range lows, and then we start a new downtrend. So basically what we have, I'm watching this and I'm thinking that this is an accumulation range, accumulate below resistance. Actually, this was all-time high, so no resistance, but obviously creating resistance on the local time frame. So we had that accumulation range prior to an uptrend into a distribution range. Breaking distribution range means most likely starting a new downtrend down to the previous accumulation range. And on the higher time frames, you will see this price structure play out quite often, that in a bullish market, and this happens on Bitcoin as well, for example. So in a very bullish market, you will see that you have mostly on the higher time frames. You can look at the daily. This will still be an uptrend, but on the lower time frames, you usually have like that accumulation range, breakout, distribution range, and then you retest the area where you had the first accumulation range. And I think that's what's happening now on gold, because we're breaking that structure. And to me, this is a very obvious daily break and retest of what looks like a previous range low on the 4 hour as well. Did I take this trade? No, I did not take this trade, because there's no confirmation at this point of my entry. But I'm definitely watching this very closely now, because of the fact that we do have that break and retest. So what I'm watching on gold is a possible short, where I want to get in on perhaps that level or the level higher, anywhere. Either a move like that, or we come up and we just form. Basically, what I want to do is I want to look for a lower high. Okay, so we're trading here right now. I want to see one more lower high, and then this would be my signal to enter. And even with that type of confirmation, waiting for quite a long time, I can still have a quite good risk to reward, because I'm targeting the levels down here. So it could easily be a 4 or 5 hour trade as a swing trade, which is obviously quite good. So that's my views on gold going forward from a swing trading perspective. But then obviously from yesterday's live stream, we looked at going long. I believe we looked at going long. The first trade I took, or we took, the first trade was here. We got stopped out on this candle right here, I believe. And then obviously we started moving higher, and I believe Victor entered around this area, right? And you took TP here, right?
Yes. More or less.
Yeah.
I can show you. I have it on. There you go. That's the. This is the. Let me go into lower time frames. I will come back to TradingView to show the analysis behind it, but we can here you can see the actual trade. Let's go forward, and this is correct. Let me see. I think I got it here. Yeah. So basically, what you were showing is the entry we had was. Let me get this perhaps better. This was the first time around when we got in. We thought we had the turn, right? Those are the two entries, one of each, and we got stopped out when price broke that swing low, right? And I think I mentioned it before that market doesn't do like one test of an area. Sometimes it does, but other times it doesn't. And I wasn't very surprised that it went another time, because reversal, they take time. They sometimes it's a V-shaped correction, and in that time the first tap is the only tap you will get. But that is not what happens on the majority of time. Majority of time it forms some other structure before it either consolidates, either before it reverses, right? And that's when the head and shoulders come in, or the wedges, and so on. But what we had was in the second tap, when I saw, even when it was squeezing the area that we were we assigned, or we identified as being a demand zone, the squeeze was not a surprise, although it took us out. It was the reaction, how price behaved as it was doing it, and afterwards. Did it close below that area? Did it was price able to, were the sellers able to close the bars below that area? And they weren't. It closed as an engulfing, as you can see here. Let me get it a little bit bigger. See, look at that nice big wick that took us out. And in the end, this is in the 5 minutes. So on the end, it ended. The buyers came in and rescued really the candle, and we closed within that same area. So basically, I consider that a squeeze. It's not a break of the setup. And after that, we were on the lower time frames. I can show that on the TradingView how it started. It switched, and the first thing it did when it switched, and this is price action, this is tape reading for me. The first thing it did was form a bullish structure. And that's, to me, that's the language that the market is telling us. That's the language. That's the sign that we may have switched. And of course, I didn't know for sure if this was going to work, but that's when I started hitting it. I put one, and after I saw another sign, I put the second one, and I just waited. And in the end, it paid us well. We are now in profit again. So we sort of we ended up up, and I didn't want to. I'll show you. I'll go back to TradingView to show the analysis, because this is only the execution. Since we did the everything else in TradingView. So let me get TradingView on, and that is this picture. Okay, yes, this image. So when we were below, right, when we had the first entry yesterday, if I can go quickly to that, the first one was, I left all these structures, although they're not valid anymore, right? Price broke those structures, but I left them in so that we can show you guys. The first time it came into this demand zone, right? This demand zone we identified, right, with blue, that this is the first time around. And if it was going to be a V-shaped recovery, that was going to be the only thing we got. But that's not the only way the market reverses. In this instance, it had another go at it, and it was, if we go to the lower time frames, you can see actually what I was reading there, and you can see like right, this is the area. This is the area price was supposedly respecting, right? And it was reacting to it, and before it changes direction, it had one go. A lot of selling scared everyone out, right? Took us out as well. But after it wasn't able to maintain or hold that price, right? Buyers came in, and it started forming these bullish order block, right? I think I have it already there. You can see it start forming, and one here comes back to retest it, and as it was going up, to me that's the sign that the order flow is switching. And but by that time, when that happened, we already had, I think I believe I mentioned this as well, that the H4 also closed a fresh bearish one. So we have on opposing sides, we have order blocks that are being formed, right? We had this one. Let me see. We were basically the whole setup in my case. Then it started on this order block that was being retested, right? It had already been retested before and came back, and I was expecting a move going up from here. And when this candle, this is when we got in. Now, if I see that, I see, okay, I have a bullish H4 structure telling me that prices could go higher, but at the same time, we had a bearish one that closed a very, let me see, I think I have it here. We had a bearish one that, let me see, we are here. We had this bearish one that closed while we were in the trade, right? So this one, as you can see, this bar was engulfed by the body of the next bar, right? During that 2 times 4 hour, in that 4 hour, the bears were in control. So to me, that was a sign that I shouldn't aim for too high a TP. Even though my setup might work, I know that this structure might make it difficult for my trade to be profitable. So I wasn't able to target either this or even the ATR that was up here, but only looking for something smaller in terms of TP. And if we go to the 15 perhaps or the 30 minutes, you can see why this is the trade, right? And you can see why targeting this didn't make sense to me, because to me, it wasn't a clear cut that price was telling us it was only going up. It was also forming bearish structure. And in that time, I think it's not clear yet what it's going to do. And that's why I only target this high, and I front run it, and I got some. I think this is more or less what I got out, something like 2 point something, I think, but I'm not sure. It may have been slightly different, something like this, and that's it. So it's as you can see, that's reading price and adapting to price as it goes. This is, of course, not a mechanical way of doing it, because I change my view based on what price action is telling me. But that was yesterday's trade. I think it went well, and let's see how it goes
very well
forward.
Yeah, that was a good trade, and I like how you mentioned, like, that's you saw signs of potential weakness, and that's exactly what happened. Man, hit that TP and then it reversed. So that was a that's a very good trade. Very good trade. Some people will say you got lucky, but the thing is, we create our own luck, right? As traders, we kind of create that luck, right? If you understand what I'm saying, we create
that's the thing. You can call it luck, and of course, this particular trade, whether I'm gonna win it or not, that is perhaps luck, right? Because there's no way to know that in advance. But when you have data, I keep mentioning it all the time, when you have statistics backing you up, that if you do this, you will end up winning after not one, because you cannot predict the next trade, but after 10, 20, 50, 100, 500, then it's not luck anymore. You have a statistical edge or advantage on the market, which is difficult to get, but that's what it is. That's not luck. That's edge, right?
Yeah. So what I'm saying is, imagine that you hear, someone say, imagine that you have someone who bought Facebook early, right? Someone bought Facebook early, got rich from buying Facebook early, and people will say he got lucky. You know, he got lucky. He bought Facebook early. But the thing is, like, that's first of all, like, you buy Facebook early and then you hold Facebook till a value where it's actually a lot of money, and then you sell, you know? So the person that a lot of people think got lucky actually found an opportunity in Facebook and then held it without selling for a long time and then realized the profits. So what I'm saying is, as traders, we learn to function from a probabilistic mindset, and we say that every trade is random, right? Every trade is random, but we are in the right opportunity at the right time, and that's what I mean by kind of creating our own luck. That's usually what successful people, they don't get lucky. They are exposing themselves to situations where things might happen, and
if you can see it another way too. This is like a little play of words, but what you can say is that if you work hard, like in trading, if you do your backtesting and everything, you will be luckier because you will have luck.
Exactly.
You will have luck at your. It's not luck, but the probability will be in your favor.
I'm just gonna reload StreamYard here. I might get disconnected, but there's a small bug here, so I'll be back in just a minute.
Okay, no problem. All right, so in the meantime, I think I can talk a little bit about gold for those who trade gold. Let's check on the chat if there's anyone asking anything in specific. Yeah, well, what I see is in gold is that we are now retesting a fresh order block on the daily, all right? And these are great trades. I know this bar, this long, big body bearish bar is scary, right? To go long, and to think of anything long, but it also creates a lot of well, not the bar, but this setup, this retesting of the daily order block offers you a lot of opportunity, because if we go to the lower time frames, I don't see anything here yet, but we could get something. This order block on the 4-hour, I wouldn't be trading it because it's not fresh. For those who know how I trade, it's not fresh and it's not part of a quasi, right? If it's not of those things, I know price will react to it, but I will not trade it. So I will have to wait for price to form something else. But if we are able to get something from this area, I know from testing that once you have a fresh order block on the daily that is being retested and it retests successfully, even if the wick goes below it, that's okay, as long as it doesn't close below it. You could have a move that could be, in this case, around 50, almost 50 points in gold. That would be $70, going up from the lowest high of those two bars, right? So when this one and the next one, or whenever it forms an engulfing, if that is the case, we could be looking for a projection, right? This is not based on a setup, but we could look at something at 70, which is 2406, right? That would be something like this. And that is only, I don't mean to say that you should have a long bias, unless that you should be looking to buy. But if we are able to catch something here, this is the kind of move that you could be able to catch, right? This is the daily setup, right? Which doesn't look at all that it's going to reverse, but that's fine. But I would be going for time frame and see if price reverses here. If it does, then I would try to catch on the H4, but actually have the daily in mind, right? So the daily, this kind of setup, right? And as we can see, there's also a order block here that could stop price. That could be the second top that we might make, right? But as of now, it doesn't look like it's going to reverse. So this is just one thought, one scenario that we should just wait for it to materialize in terms of reversals. All right, let's see. Please, guys, not forget to hit the like button. We will have during this stream as well, the same as all the other ones, we will have giveaways. We will be giving away accounts, prop firm accounts, which you can win. And the more likes there is, the more accounts there will be for the giveaway. So the more chance you have of winning one. And you never know, that may be the account that starts the journey, your journey into big profits, right? So do hit that like button so that you can have better chances at winning one, right? Let's see. I think I think Jonathan went gold scalping behind the scene. All right, let's see. All right, let's see. All right, on the chat, I don't see any specific questions. So I will go and look at EU because that is EU and GU. Now we have started going into gold, but previously I would only trade EU and GU mainly. I could trade anything, but that's where I start my day, and usually that's where I get my setup. There you go. All right, so let's see. We have. There you go, Jonathan. There you are.
Hey, no, sorry, I'm on the laptop. Something happened with my PC. I can't log into StreamYard, so I'm gonna be in the laptop here. See,
Yes.
I guess the sound is quite horrible.
It doesn't sound that horrible, but it is. The other one was better, yes, but it's
That's
okay.
a
I think.
nice way of. That's a nice way of putting it. So what are we talking about?
Right.
Talking about gold?
Yeah, no? Well, I did my gold analysis for not analysis. It's just the order block, the daily order block that we have right now, and that price hasn't is not looking to be forming any reversal pattern. But this is the type of trades that I would like to catch when we have the daily telling us, giving us an opportunity. And this is to me an opportunity to look for a reversal pattern on the lower time frames when we have the daily order block being retested, which is now the case. So what I mentioned was that this is how you can get those monster risk reward trades when you have the daily or any higher time frame backing you up in the setup, right? And if you get something on the hourly, you can consider to hold all of it or a part of it for that bigger time frame target. But it wasn't a complete analysis, just an order block that I saw on the daily that is significant to me.
Yeah, I mean I can definitely see how when looking at the daily, you might have a double bottom, it might go higher, and that's also why I said I wanted to see some extra confirmation with a lower high, some type of lower high structure and a break lower on the 4 hour, because otherwise you're looking at the structure and it might just we might form a very, very big double bottom or W structure on the 4 hour. And I'm thinking, I mean, that's a crazy trade right like there, but yeah, something like that, or just current at current prices, that's going to be the low, and we're going to move higher. That would also be a double bottom and W formation. So, I mean, it's definitely likely, and I think we could both be. I mean, we can't both be right, but what I'm saying is your trade can be right, and that will not give me any confirmation.
Yeah, well, actually, there's no trade yet. There's no setup. This is just one idea that if there's something on the lower time frame on the hourly that sets up, I want to catch that wave on the daily as well. If I see that the order flow does follow through, right? Because before you can upgrade a trade from, let's say, an hourly to a 4 hourly to a daily, the market has to tell you that it has that intention, and will tell you by forming bullish structures in increasingly higher time frame. So if it does that, then I can have the confidence that it is a bigger setup than just on the hourly. What I wanted to say is that there is a order block that it's not an unmitigated order block anymore, right? This it has been mitigated already, but it doesn't mean to say that it will not, be retested a second time around. If typically when you have like two order blocks like that, and a lot of times it will touch both of them. So it will, even if this is not invalidated like a daily close below it, sometimes the wick can touch the next one, and off it goes, right? The fact that if this is the second time around that price is coming to the second order block is a reason for me not to consider this as a trade, as a setup. I mean, on the daily time frame, right? Because that was the first. This is the first tap, and that this, if it does reach that, that would be the second one. With each increasing tap, the order block becomes weaker and lesser quality. So you can trade the second one, even the third one. You can trade them all. But I know from my numbers that the best one is the first one, and I decided to stick to that. But it doesn't mean they're not good. They just have a lower probability of working. But yeah, we'll have to see. The market is very bearish as of now on gold. Someone asked, by the way, if the price action in gold is the same as in forex. I think it's a very crucial answer or question to ask, because that's valuable information if you're going to be trading one of them, or either both of them. You need to know if there's any difference in PA. And I think there is. And one of the things there is, for example, gold is a safe haven asset, right? And not all forex pairs have that influence, right? And with safe haven, it means that certain geopolitical events will cause gold to have an increased interest for people to move into gold. Dollar has that safe haven effect as well, but not all pairs have that. Actually, the other ones don't have the same effect. So that's one thing. So it can move differently in that sense, because when you have like bigger fundamentals moving the market, it can the technical analysis can be a little bit trickier, and that's the same reason why you have a more trending market in gold. So if you zoom out, you will see, if we go to a lower higher time frames, much higher, you will see that gold is really very trendy in comparison to other pairs, right? If you go to the higher time frame, you can see how this is not something you will see easily if you go to the monthly on a forex pair, right? Because they change through time, but they maintain in general within a certain range. Even if that range is very big, it is much more ranging. So that's another difference with PA in gold in comparison with the other forex pairs. But if you go to the lower time frames, you may not see that effect as much, right? Because on a day-to-day basis, it will still be consolidating, ranging. So that's one difference. On the lower time frames, you will see that less likely or less easier. But still, gold tends to trend more often than other forex pair. So I think those are the things. The other thing is also the volatility. The volatility of gold in comparison, let's say, to EU, gold is much more volatile, and you can see it as well in the wicks. So if you have tight stops, and that's something I know from experience, that the strategies that are based on very tight stops will tend not to work as well on gold, because you will get your win rate will drop a lot, and those wicks will take you out more often than it would on another pair like EU or GU. So, and that's one of the reasons why I also gravitated toward those pairs, because the wicks are a little bit more manageable, and that allows me to put in more lot size, more size on, because those wicks are not as brutal as it is with gold. So what I would advise is, if you're new to gold, start with a low risk, test waters before you go in on your full risk. If you have been trading forex before, don't go in at the same risk right away. Have some data on your strategy, how it performs in gold before you increase that risk. That's one advice I would say.
All right, so I'm back finally in the office. I'm back. Right camera, right microphone, everything. It felt so weird on the laptop. Like I had one screen. Like how do you do anything with one screen? It's insane. And I was like, I had one screen and like, how do I do this? All right, so risk management. Let's talk about risk management. I wanna hear your thoughts on risk management. I want you to break it down in a way that even I can understand.
Sure. Let me
test water before you drink. That's test water before you drink. That's a good yeah.
Yeah, that's certainly a good advice. I mean, for everyone, as well as those drinking water, not only those forex traders.
Yeah.
Let's
remember, guys. Remember to drink water. It's important stuff. And coffee, water and coffee. All right. Before we go into the risk management side of things, would you from a daily perspective, would you buy or sell AUD CAD?
You asking me?
Yeah, you have 1 minute to decide.
Oh, but dollar CAD. Let's look.
AUD CAD.
But I don't have any. There's news coming out. Any news?
No,
yes, there was in one.
AUD CAD, so Australian dollar CAD.
Aussie dollar. Okay,
Aussie dollar.
Okay. I haven't looked at that pair in a long time, so let me check that.
You can just type it in.
That's true. Haven't done that. Okay, no, but I have a list
CAD,
from
Australian.
the brokers that
listen, Australian dollar versus Canadian dollar. AUD CAD.
I'm sorry.
Your 1 minute is up. Your 1 minute is almost up. Gotta find the right pair first. Okay, buy or sell from a daily perspective. Isaac says sell. Isaac is saying sell. Victor is telling me to buy or sell. Buy or sell.
I think 1 minute would not be enough for me. We are getting close to supply zone, so I would be mindful of that. There is a reaction on the lower time frames based on the H4, right? So that's not something you want to go against. On the daily time frame, I would see this as a retrace or an opportunity to continue if I have something on the left that makes me think that price will go much higher. It is ranging. If you look, we have taken so it's not making higher lows. I mean, while still making higher highs. So that's a little tricky. But in terms of lower time frame structure, I would say the structure is still not completed in terms of reversal pattern, because if I look at this, I would consider the break line here. So unless it breaks the neckline, unless it breaks this, to me, it's still bullish in this time frame. So I don't want to get go against the H4 because it's forming it, and we need to respect order flow as it is being printed. But this could be just a retracement for a continuation into that order block, and it depends on what it does there, right? If it's going to continue or not, that's completely unknown to me. But what would I do? I would wait for the order flow to become bullish again, and that could be, let's say I have this order block to the bottom, and this consolidation is a great place. There's also let me go to the lower time frames if I see anything. No, I would say I would wait for price to get to this area and give me some reversal pattern, either a regular head and shoulder or a quasi, and that I will be able to take to this area again. And from a daily perspective, I don't have any idea. Let me get the weekly to see if we have any biases. We do have.
No, man, that's good. That's good. That's
here.
That's not.
So,
I just wanted you to say sell. That's not what I wanted to hear. There's no conflict with my analysis. That sucks. All right. All right. No, let's talk about risk management.
That's the only thing I can tell you. If you're a shorter time frame, I would. The fact that it went from it is moving away from a supply zone and it's forming bullish structures on the H4, that makes me think that it could continue to go lower in this time frame, right? So I could go intraday, go short now, but
you're way too diplomatic, man. I just wanted you to say sell, but that's well.
No,
it's a good analysis though. Yeah, this. If we have time, we're definitely going to go through this question. This guy says he posted in Discord, but I feel like we're running a bit low on time here, and we really want to cover the risk management side of things here. So if there is time to cover this question at the end of the end of the live stream, then absolutely we're going to do this. If not, we're going to do this in the beginning of tomorrow's live stream. And Henry is absolutely right here. I'm looking for moral support. I'm basically looking for that traders conference, which was very hard to difficult to get today.
Yeah.
So,
I don't know what you saw there. So if you want me to critique your setup,
you just wanted you to say sell. That's good. Oh, you mean the question?
No. I mean, if you want me to, give you some feedback on a certain setup, I can give you the, cons and pros of the setup based on the way I see it. And if that's something, you can take some value out of it, right? If you say,
well,
okay,
I can show you quickly what I was looking for on ADCAD. So on ADCAD, I'm basically just watching. So we have two major levels here. Got the one above as resistance and the one above the one below being support, and I'm basically just looking for a range trade from resistance down to support. We also have it's also in the short real zone. I'm thinking I want to basically just take this trade. If it breaks down, be a break and retest down to that level. This is what I'm watching. You could say that it's almost like a head and shoulders. It's not really, but I'm kind of watching this, something like that.
It makes sense. It makes sense, especially for your supply zone that you have there, and it is reacting, and it's not closing on the H4 above it, right? That's a sign to me that is respecting it only with the wicks, and it is going through. It has if it closes, for example, if it closes below that supply zone and it was unable to close above it, that's a sign to me. It means that the buyers are having difficulty to close above, but the sellers are not having difficulty to close below. So you want to be a seller in that case. If I see that, even though my order blocks are not drawn the same way, I could see it go lower. And on the daily, there is, if you assume that it's going to go lower, there is nothing on the daily. If I go back to that chart that I had on, and my second question is, okay, if it's leaving this order block, where is it going back to? And I don't have an order block below us, right? So in my view, it only has this area that it already mitigated it, and sure, it can go to it, but Yeah, maybe I'm too selective, but it will be going to a demand area, and that is in here, right? I can't mark this as an order block because of my rules, but we can all see that this is the area that it reacted from. So if it comes back, probably that makes a great sense. This move makes a lot of sense, right? If on the lower time frame this is being rejected, but I don't see that on the daily to confirm that. What I would want to see is this happening. If I'm going to do that trade that you just mentioned, I want to see this line being broken, right? And then it comes back, and then I'm interested in going down. So this is so yeah. To me the reversal is immature in my view, still immature. But it can be V-shaped. Doesn't always have that proper head and shoulder or Quasimodo reversal. So. But
no, I mean,
it
that
makes a lot
makes
of
sense. That makes sense, and it's also it's always interesting to see, like, it's always interesting to see someone else with because we're basically what you're looking at. Like I'm looking at this level here, and you're looking at it like this zone lower. So if I'm gonna go short, before that reversal is activated for you. But it's always interesting to see another trader with another system looking at looking at the same trade. I think that's very interesting. And also, one thing that's interesting is, what you're saying is like, it's not. When I started trading, I could be watching these. I could be watching these live streams and other traders doing their analysis, and I used to get affected by that, right? I used to change my approach. I had an idea, and then someone, like, imagine that you have an idea of a trade, and then someone comes along and it's like, oh, this guy has been trading for many years, and you're like, oh, he wants to short, but I want to go long. Yeah, okay, I'm not going to take that long. I'm going to go short instead, But basically what you're doing is, like, he might be right and you might be right as well over the course of 10 trades, right? So I think it's important, guys, when you're watching these live streams, if you have an idea, if you have a trade idea, a trade setup based on a system that you've tested, based on a system that and I show you something on the same pair, and that's opposite to what you're doing, that shouldn't affect your plan whatsoever, because we're not trading the same. We're trading most likely very differently. So yeah. I think that's very important. You should take everything that we're saying here as educational value, and kind of like try to take things and take parts of what we're saying in our system and try to find ways of incorporate it into your trading, and never really copy what we're doing, because that's never going to work. TradingView has this beautiful thing when you're closing TradingView, and it's like saving. There comes up like a quote, and it says like oh, I'm so glad I spent $200 on the Signal service. Said no one ever. I think that's a good one. But yeah, that's true. I mean,
I think what you said makes is the reality. You have to put things, not only in trading but in life, you have to put things in perspective, in the right context. And what I say, or what you say, is based on your context, the context of your strategy, your way of looking and approaching to the market. And the same goes for me or for anyone else. So it's, if I say that is a good entry, it's based on my way of interpreting the market. It's not the absolute truth. Of course it's not. So if you have to be conscious of that. So don't take our words for, for sure, no trade signals, but as well as if you have in your way of looking to the market, you have your own argument that are still valid, then don't listen to me or anyone else, because you have to put things in perspective, in their right context, and the context is dependent on the person talking, right? So to me, this might be right, but to you, the same setup may not make sense to you, because you have a complete different strategy, complete different holding time, right? I might get my TP in next 3 hours, but you're waiting for maybe the whole next day, right? So, and we could still be both right or both wrong. It has really no relationship from one to the other one. Your trade can still work out while mine will not, or the other way around. So you have to know that and take everything we say and be conscious of that, right?
Yeah,
It makes a lot of
definitely.
sense.
Yeah. All right, so maybe you can switch over to your screen and we'll talk about risk management.
Sure. Let's hit the subject. Sure, I will switch to mine, and that is, there you go. All right, so today I'm going to be talking about risk management and specifically position sizing, because position sizing, the method how you do that, is one of the ways you manage your risk, right? It's not the only way you manage risk, but that is one of the great tools that we have to manage our risk, right? To have some control into how much do we risk per trade, and what effect that would be. All right, so there are basically a number of ways you can position size. One of the first, and maybe not the first, but one of the most simple way of doing it is with a fixed lot size. And although it seems like wrong at first sight, because why would you want to do that? There is some validity to it. Like, say, if you are trading with a fixed stop loss, fixed lot size would make some sense, because actually, what is your risk when you're trading? Your risk is the distance from your entry to your stop loss. And I'm leaving outside the thought of trading without a stop loss, right? That doesn't make sense to me. Even if you don't put it in, you have a stop loss. And if you don't, if you never think about your stop loss, then your equity is your stop loss. You always have a stop loss, whether you want it or not. So the risk is the distance between your entry and your stop loss. And if you're using, let's say you're a scalper and you scalp the market and you have a fixed distance to your stop loss. Let's say it's 20 or it's 10 pips or whatever distance you might have. A fixed lot size makes sense, right? If you're at one, because every trade will have the same amount of risk per trade, right? This is one of the first things, right? You want to distribute your risk evenly among all your trades, right? So you have a optimal risk distribution. Well, fixed loss makes sense. Let's see, what I don't like about let's see, got my notes here. What I don't like about it is that it does not adjust for, well, the majority of us, well, not a majority, but a lot of us, and perhaps the majority, don't have a fixed distance to the stop loss, right? So a fixed lot size would not make sense, because at those trades where you have a bigger distance to stop loss, maybe one trade, if you're trading price action, for example, at one trade you might be putting your stop loss not at 20 or 10, but maybe at 30 or 50. And that time you are doubling your risk, because if you're using a fixed lot size, so it has limited usage. Sometimes it's still valid to use it, but it's very limited, especially if you have once you have different distances to stop loss, it's no longer valid. Right. The next way you could do your risk management is through the use of a fixed dollar amount per trade. Right. This is a more common way of doing it. Right. You pick up a number. Let's say you're trading a 100K account, and you say, okay, I'm going to risk 1,000 per trade, or I'm going to risk 100 per trade, or whatever number you choose. And you do your lot sizing based on that number. And that number, that dollar amount, does not change, right? It's fixed. It's a great way of doing things, right? Because now you can adapt your lot sizing according to the distance you have to your stop loss. If the stop loss is twice as far, your lot size automatically will be half as big, right? Because the risk is always the same. And that's great. The problem I have, and you could use this, and it's not wrong, especially if you consider, let's say, a shorter period of time. Let's say on a challenge, right? On a challenge, you typically you hit in the end you only have two results, right? You either hit the max loss on a challenge or you hit target, right? And in between you're trying to reach one of them, right? So in that sense, it makes sense, but it still has a big disadvantage, and I'll be talking about this. Assume we have, let's see, assume we have, yeah, maybe I will show this later on. Assume you have a platform account. Okay, let's begin again with the same idea. You have 100K, right? You have 100K, and typically the two-step accounts, they have a 10% maximum drawdown, right? That's the max loss permitted, right? If you reach that, you lose the account. Okay. Assume you're risking 1,000 per trade, right? Which is something we heard a lot, right? If you hear on different chats, either on YouTube or anywhere else, 1%, right? Because 1% of 100K is 1,000, right? So you're risking 1%. That's a very, very common risk setting. All right. So let's say you're risking 1,000 per risk. What happens when you have 5 losses in a row, right? And even if it's not five in a row, what happens if you are at minus 5,000 loss? So either 5 in a row or in any other combination, but your equity reaches 95, right? So you are minus 5 P&L. What are you risking at that moment, right? You would say, well, I'm risking 1%, but is it the same? Is it, you think, fixed dollar amount? Are you really risking the same risk? Are you using the same risk if you're still risking 1,000? Because if you think about it, right, on a prop firm, you have 100,000. Okay, but from that 100,000, the only equity that you actually have available is the 10,000 that you're allowed to lose before you lose the account. The other 90 is not available to you. There's no way you can use the other 90. So basically, you don't have that 90. What you have is 10,000, the available drawdown, and that is something I was talking about before. The available equity, or which is the same as the available drawdown allowance you have. So when you're risking 1% on the balance and thinking, okay, it sounds like not too much, 1%. But if you compare that with the available balance that you actually, the available equity that you have on a prop firm account, you're actually risking 1,000 from the 10,000 you have available. So you're actually risking 10%. It's not 1%, you're risking 10% of the available drawdown. And that is where this method of position sizing starts to break down. Because when you go in drawdown and you have 5 losing trades, and that's not very difficult. We all been there. We all been having losing streaks. Five losses in a row is something happens very easily. Okay, when you're there, you have 5,000 left of the distance to your limit, right? To the max loss, and if you're still risking 1,000, what you're actually risking, you're risking 1,000 on the 5 that you still have available. So you're actually not risking 10% anymore. You're risking 20%. And as you go closer to that max loss limit, your risk becomes increasingly bigger. And with your risk, is the risk of ruin becomes very, very real and very easy to reach. So if you do this, if you risk a fixed dollar amount that doesn't take into account whether you are in drawdown or not, you are exposing yourself for, when you are in drawdown, for reaching that max loss very quickly. So okay, so that's one problem I have with fixed amount. Although on a challenge account, that's one issue. And if you are working, let's say you are trading your own capital, a fixed dollar amount as well does not make sense, because in time you will not, your growth will be linear, because you will only, you're risking the same amount all the time. Even if you're, years after years, your growth will not have any exponential growth. Well, that really is what you want, and I'll show you that in a chart in a little while. The other option we have is fixed fractional risk, right? Or also called fixed risk, right? And what this means is you are, the dollar amount is not fixed, but the risk setting in terms of the fraction of the available equity, that is fixed. Like a fraction, you can also express it in percentages. So the percentage of your available equity that is being risked, that is what's fixed. And I think that is a much better way of doing your position sizing, because if you think about it, the other example I gave, where the dollar amount is fixed per trade, as you go closer to that max loss limit, you're risking much, much more than initially you thought. But if you do it fractionally, or if you do it the fixed percentage, as you go down with your drawdown, right? As the available drawdown goes down, your risk also goes down, right? So if you're, and that makes it easier to survive. And one of the first rule for investing, for trading, is do not lose the account, right? Profit comes second. First is survival, right? So the first rule in risk management is to keep the account, right? Preserve capital. Secondly, you're going to go, okay, how can I preserve capital and make profit, right? It's not the profit before, it's the conservation of capital, okay? And this rule, or this method of doing position sizing, accommodates the preservation of capital much better than using a fixed amount. Okay, I had this one. Okay, I had this written down before, but I spoke about that already. So I'm gonna take it. Well, let me put it here. This is on. Doesn't really matter, but okay. So if you put it in a graph, this is the graphical representation of what I just spoke on fixed dollar amount, right? So in time, if you have a winning strategy, or even a winning period, and we all have them, winning period and losing periods, right? I mean, there's no other way to avoid that. You will have ebb and flows in your equity curve. And if you zoom out, when you're in a winning streak, you'll be winning at the same rate, right? A linear growth. And this is the reason what I just mentioned, that if you have an account, let's say you are at 10, let's say it's your own account. Let's say you have 10K. This will not allow me to, you have a 100K account, and this is your own capital. As you are growing, right? If you're only using a fixed dollar amount, the amount you will be risking does not change. So even if you are at 150, at 180, you'll still be risking the same dollar amount. To me, that doesn't make sense. If I have more money, I should be risking more, right? But the same thing goes the other way. If I'm losing, I shouldn't be risking the same, because that risk is only adequate if I'm at 100K, but it's not adequate if I'm at 90,000, which is, if you're trading your own account, but it also the same applies for your prop firm accounts. Okay, so this is linear growth, and this is okay in terms of risk. At least you have calculated in advance and you have a plan. I don't think it's the best way, but it's okay, and that's the way most people do it. The advantage this has that you only have to make that calculation once at the beginning of your trading, and that's it. You have a dollar amount and you just stick to it. It's simple, and that's an advantage. But it will make you, as I said, very easy for you to reach your max loss limit if you are in a new drawdown. As the closer you get to that limit, the chances of ruin becomes much bigger. Instead of that, what fixed fractional risk means, or what the equity will form will be this. When you're using fractional, this is what will happen with your equity curve. Okay. When you are in a winning streak or in a winning period, doesn't even have to be a streak, in a winning period, as you are winning, your available equity becomes bigger. Since the risk is calculated on the available equity, the more you win, the more you can risk. And in other words, you will be rewarded when you are winning, and your equity curve will look something like this. It will not be linear, it will be exponential, right? And this is what we want. This is what investment world wants. You don't want to be linear, you want to be exponential if possible. And the other way around, and this is perhaps even more important, is that by the other way around also applies. If you're losing or in a losing period, and we all have those, by doing a fractional risk, a fixed fractional risk, you will be decreasing your risk, and the equity curve will look something like this, right? So as you're going down, you're risking less. So even if you are still losing, you'll be losing less. And that will make it more difficult, and in theory, almost impossible to reach that max loss limit. I say in theory because at a certain moment you will not be able to, go less than 1 micro lot, and in a certain moment you will reach it anyways. But it will make it much more difficult for you to reach that max loss limit. And remember, the first rule in investment and trading, it's to conserve capital, to conserve that account, right? So, and this is to me a much better way as approaching that position sizing to, make it more difficult for you to lose the account. There is one disadvantage of using this fractional risk position sizing way, is that when you are, let's say, in drawdown, let's say, assume you are here, right? It is for the person who is using a fixed dollar amount, let's say the blue line, easier to get back to break even, because that person is risking a lot, a much bigger amount compared to someone who is using fractional, right? So it's much easier to recoup. So, and that means that it's going to take much longer to come back to break even if you're using that fixed fractional risk, right? That's the drawdown. So it will take you more time to get back to break even. But if you have to ask me, if I have my capital and I have to, I can choose between losing it all or taking longer to get back to break even, I know what I want. I don't want to lose it. I don't mind waiting longer, to get back to break even. So in that case, the first rule is to preserve capital. So I want at all costs to avoid losing the capital. And the prop firm account is the same. We're talking about the available equity, right? So if I have a prop firm account and let's say it goes in a very deep drawdown, I prefer, to use the fractional, and it might take longer, maybe a couple of months longer for me to come back and hit target than to losing the account altogether. To me, that doesn't make sense in terms of risk management. That's not That's higher risk. I don't want higher risk. I want less risk, right, of losing the account. So these are the ways to do. Oops, let me get that straight. These are the ways to handle risk, and I think I have it here. This is the other way. You have the linear way, which is the fixed dollar amount, and you have the exponential growth or exponential way, which is the orange chart in this diagram, right? And I think the disadvantage of doing fixed fractional is that you need to be making that same calculation not once at the beginning of your trading journey, but every time. And it's going to be very impractical to do it after each trade, especially if you trade many trades per day. So you'll have to find some common ground. What I do, for example, is I calculate it every day. So every beginning of the day, I calculate what the risk is. And that depends on the available drawdown that I'm currently at, if I am at a drawdown, right? And so there's more calculating into it, but I think it's worth it. It's part of my job to manage risk as money manager, right? So this is part of the job. I don't want to do it any other way. I want to, make sure that I do my best to keep the account, preserve the account, preserve capital. Okay, so that is position sizing. And are there any questions on this topic? Right? It's about risk management and how you do position sizing. We have different methods, and time I wrote it with Go ahead.
Let me go through some questions here. So first, this one, I want to mention that it doesn't matter what type of trader you are. It doesn't matter if you're a scalper, swing trader, day trader. So here, Bell says, it depends on what type of trader you are. If you're a swing trader, then maybe you could do 0.5% to 1% risk, since you're taking few trades a month. It doesn't, like, the number of trades that you're taking a month doesn't really matter. What matters is what's your statistics and what is your max drawdown. If you know that you have a low win rate, and you're able to have lots of losers in a row, and you're you actually do have losing streaks often because you have a low win rate, then taking 1% per trade makes no sense, because you're going to lose the account quite quickly. So the number of trades per month doesn't matter. What matters is what's your drawdown, right? Excuse me.
Yes, if you have data, that's the best. Well, it's actually not the best way. There is another way to do it, even better. Even if you have data, and I can say a couple of things about it. If you don't have data, if you haven't done backtesting, then I understand that question, that the frequency of the trade matters, but only if you don't have that equity curve. Because as Jonathan said, if you have the equity curve, that is what you should be looking at, not the frequency of the trade. But if you don't have that, assuming that you don't have the equity curve, you don't have your data on backtesting, then how do you decide if you're a swing trader and you're going to be, or a scalper, if you're going to be using 1% or 0.5% or 0.1%? And the thing is, it's the frequency of the trade, because a swing trader might only take one trade in a day, and not even every day. They are allowed, or if you think about it, they will not have like 10 trades in a day as a swing trader. Oh, that's theoretically possible, but typically it doesn't happen, right? So, but a scalper can have 20 trades easily in a day. So the frequency of the trade, if you don't have data, right? I repeat, if you don't have data, the frequency of the trade will give you an idea of how much you should be trading. But that's a very rough way of doing it. There's a much better way to decide, because I see that all the time. People come in Discord or any other place, and they ask each other, what should I risk? I have a 50K account. What should I risk? Should I risk 1%? Should I risk 0.5%? Should I risk more than 1%? to answer that, I will explain how to do that, but there's no good answer for that. If I don't have the data, if I don't have an idea of how your strategy performed in time, there's no way that I can give you a correct answer, because 1% for one person might be too little, and it might be too much for the other one. There's no one size fits all for everyone. That 1% is okay for everyone. It doesn't work like that. It depends on your strategy. Okay, so I will. Do we have other questions before I explain how to assess the risk setting?
I want to go through a couple here. Let me see here. This one quickly, yeah. ADJPY, same. I have the same strategy on all forex pairs, so nothing different with that one. How do we qualify for the giveaway? All right, so what you have to do to qualify for the giveaway is you hit the like button, and then sometime during the course of the live stream, I'm going to post a link in the comment section, and you will know when that happens. I will tell you. It's going to pop up on the screen. You will know when it's happening, but it's going to happen sometime during the live stream. So all you have to do is just watch the live stream and hit the like button. I think and yes, all the giveaways are randomly selected. You will enter. We'll give you a link, and you will enter that, and then we will draw a winner randomly from the people that enter using that link. Okay, one last one before we go. See here. Where is it? Victor, do you prefer instant executions or limit orders, market orders or limit orders, and why?
In my case, I prefer instant execution, so market orders, but that is only because I tested both of them with my strategy, my way of approaching the market, and the market execution works better. I would have wished that the limit order would be better because it gives me more freedom. I can put it in advance, and I can walk away, and it gets triggered, and it will be much more easier. But sadly, it's not the case with my strategy, but it doesn't mean that that's going to be the same for you. That's something you have to figure out. You have to ask your data that. I can't tell you that I prefer instant execution to answer the question, but it's not necessarily the best for everyone.
Okay, so yeah, I think I agree with you. I mean, should you be using limit order or market order? It depends on your system. You know, for me, I'm a break and retest trader, so the way I'm trading is I can very easily use limit orders, but I will also use market orders if my opportunity to use a limit order is gone, right? Okay, so can you explain the position size calculations, for example? So I think you have a position size calculator for MetaTrader, right? I have one as well, and the one I use is you can use Google position size calculator for MT5, and I think it's going to be like the first result. I think it's from Learn Forex or something like that. And using a position size calculator like that one is very, very simple. You can also go to Baby Pips or Forex Factory, whatever, and it's very easy to calculate, you know, your position sizing using a position size calculator like that one. And I recommend that people to actually use something like that.
There's one. If I may go back to the question of limit orders, there are some instances I do use limit orders, and that is, for example, if I have, let's assume I'm on the 1 minute, right? So this is on the 4 hour. Let's go on the 1 minute. It can be not necessarily 1 minute. It can be shorter time frame as well. Assume that I have a structure. Assume that I don't see anything here that pops out, but assume that I have, let's assume for a little while that this is a valid quasi, and it breaks the neckline and it comes back, right? Assuming that this happens and I get a trade on my system triggers me to, let's say it triggers me to enter here. Let's say it triggers me to enter there. And if in the process, as it is going up and I want to add to that position, right? Not with a signal because the signal already happened, but assume that I want to add. And in that case, what I would do is I would put a limit order at the beginning of some kind of structure, right? Because I already know I want to be in the trade. Market has already signaled. I have got all the boxes checked, and I just want to put in more trades to it. And in that way, I would put another one, and on that limit order, and I will have the same stop loss, right? And that's a second position because I want to stack. It doesn't have to be the same place. It can be a little higher, and I'll have another. It will have the same stop loss. And in those cases, I already decided I want to be in, but I decide, okay, but this is the only price I want to be in. If it doesn't hit my price, then I don't want to be in to add on my position. And that's the only way I use limit orders, I think.
Yeah, no,
That's
definitely makes sense.
To complete the answer.
All right, I don't think we have any more questions. So you want to move on if you do have anything more you want to share on this.
Sure. The next question is, okay, so I showed here the positions, the method to calculate your position size, right? And I argue that the fixed fractional risk is the best one. I think it is. You may disagree, but that's my argument. But that still doesn't answer the question. Okay, so but how much should I be risking, right? This is only how should I be. What method should I use to calculate it? But how do I know how much? Is 1% too much? Is 0.1% too much? And that's what the next part of this. It's a little bit shorter, but I think it's equally important. So let me get it here. So the next question is, okay, so how do I know how much risk I should be taking? Is 1% the same question I mentioned? People ask them in different places, and there is no good answer other than this. There are different ways to do that, right? You can do it because what you're actually trying to do is gauge the risk, right? You want to be choosing a percentage that will not make you lose the account, right? But you don't want to be under risking because you want to get the target fairly at a reasonable time. So, but how do you gauge that? One of the ways to gauge the risk of a strategy is by measuring its losing streak, right? So there's no other way to do it than to have some kind of data. Either you have the win rate and the the win rate and the risk reward ratio, and you with calculation on probabilities, you can assume. And I think this is what you did the other day, Jonathan. You said, okay, my risk reward is 1 to, let's say, 2, and my win rate is about 50%. And okay, how likely is it that I'm going to have 5 losses in a streak, or 10 losses in a streak, or 20 losses in a streak? And based on whatever assumption you're making, you can say, okay, I think it's not likely that I will have 20 losses in a streak. Thus, I will assume that I will not reach that. And based on that assumption, you could calculate what would be the risk that you're going to be taking. And you will have to, and at that moment, you will have to include the trade frequency, right? Because if you're a scalper, at 20, the chance of hitting, even if you have the same kind of strategy, like the same. I mean, the win rate is the same and the risk reward is the same. If you're a scalper and you're hitting 20, 50 times in a day, trades in a day, the likelihood of hitting a losing streak of 20 losses is bigger in a scalper than it is in a swinger who has the same metrics in terms of win rate and risk reward. And the reason is because the trade frequency is much higher. So, and these are the things that you could do: a losing streak and considering your trade frequency. Okay. The other way to do it is to do it by using backtesting and measure the max drawdown. So basically, what you're trying to measure is from the peak to the valley from your strategy, your equity curve, right? And that was the other way I was proposing the last week, right? So you do your backtesting a long period, as long as you can, reasonably can, and then you measure the peak to the valley, and you assume, okay, this is what I measured in my backtesting. I'm going to assume that this is the typical drawdown. You don't know that, but you're going to assume that this is the typical drawdown that I will be having going forward. And let's say that's 5% or whatever metric you might be using, and you will be using, whether in R multiples or in pips, you'll be using that as the basis of calculating the actual risk you're going to be taking per trade. But there's even a better way to doing that, right? So doing backtesting takes a lot more as for effort, because you will have to actually do your backtesting, and 10 trades is not good enough for backtesting. 20 trades is still not good enough. You need to have more data.
Excuse me for interrupting, but I think that this comment is very good. I mean, it doesn't have to be in a row. And I think that's also very important to remember. You can have five losers in a row, 2 winners, 5 more, 1 winner, and then 10 losers in a row.
Exactly.
So it's important not only to look at the statistic. I mean, I know when you do a Monte Carlo simulation for Monte Carlo simulate, I think it's called Monte Carlo simulation, and they will show you different results of your trading metrics and also the longest losing streak and the longest winning streak. But people forget that you can have a 10 trade losing streak with 2 winners and then another one with 10. So yeah, it's important to that's kind of like, that's what I understood when I heard you talk about looking at your drawdown, because you can have like your drawdown could be like 10 losing streaks, 5 winners, and then 10 more, which basically means you that's a 15 that's basically a 15 trade losing streak, you know?
Yes, indeed. That's the drawback from using losing streak as a metric to gauge your risk, because that's actually what you're doing. You're using the losing streak as a way to measure and to know what the actual drawdown will be. And a losing streak is good if you don't have that backtested data. But the best way to do it is having your backtest, having enough trades in your backtest, and measure the actual peak to the valley. Right? That's the way I like to do it. Losing streak is okay, but I try not to do it that way. And there's another way, and you alluded to it already. There's another even better way of doing it, better than the peak to value. What you do is you do your backtesting, and you get those numbers, those win rate, the risk reward ratio, and different risks you're using. And because when you do your backtesting, that is just one run. It doesn't necessarily mean that that is the only possibility going forward. You can have a bigger drawdown because simply you only measured in a limited period of time, right? You don't know if you had backtested double the time, if your drawdown would be bigger, probably a little bit, who knows, right? So the best way to do it is by using Monte Carlo simulation, right? If you have the data on your average risk reward and you have the win rate of your strategy and you have a lot of data, you can put that in a Monte Carlo simulation, and will give you not just one run, but 100, 20, 50, whatever number you think you will need, and you will have a better, a more accurate measurement of the risk, actually, because it's not just one backtesting based on randomness. They will bring randomness in the run, and you can have it's a much precise way of measuring your risk, and that is, I think, what we should be doing, right? So losing streak is okay, but it has a limitation. Doing with your backtesting, that's much better, I think. But even backtesting can be improved by using Monte Carlo simulation. And that is what everyone should be doing to know how much they should risk per trade. So it's useless to ask if 1% or 0.5% is good or not to someone else who's not trading the same way you are, right? All right, so that's my my way of looking at position sizing and risk management. Any questions?
I think that was a really good, really good breakdown, and lots of good information here to really think about, because most people, what they do is like they say, "Oh, risk 1% per trade," and it's much more than that. I mean, risk management is much more than that. And you have to be very careful with like, the more I talk to you about risk management, the more I understand that I'm not only supposed to be thinking about possible, the possible losing streak. I'm supposed to be looking at the drawdown of my equity, and how to kind of structure that. We have someone in the comments saying, like, asking if you are ICT trader or SMC trader. I've tried to reply to them saying that you trade your own concept, even though that you're using order blocks. You're not an ICT trader, and SMC. It's
no.
Just I don't even know what
ICT. If I may answer that, order blocks is a concept that is considered ICT. So in that sense, I'm trading something that is part of what ICT.
It's not, though. I mean, it's not.
It?
It's not. Now order block is. I mean, I think was maybe ICT was the first person to call it order block. I can't remember, but like I do remember that. Now I've seen some really early stuff from Tom Dante talking about very similar stuff as ICT was doing. So I think what ICT did, he definitely popularized it, whatever that word is. But yeah, I guess what ICT did was just make these concepts popular, and but I think what's important to, like, ICT is very popular, and right now in the retail world or trading world, it's like you're either an ICT trader or you're not. You're either a SMC trader or ICT trader, and he invented that and all of that. I think it's very important to remember that it doesn't really, like, you shouldn't put a label on it, right? You shouldn't put a label on your trading or your system. You should just get the knowledge when it comes to technical analysis, get the fundamental knowledge, understand what TA is, go to the source. Maybe the source in this case would be something like the CMT, the Chartered Market Technician courses, right? Look at that. Look at the definition of technical analysis, and learn the very basics of technical analysis and indicators and what they do, and then try to combine different things that might work for you, that might make sense to you. Because I think even though ICT has done a lot for retails, I think it's also dangerous to just put yourself and put a what is it I can't, the word is just gone. I don't know what I'm trying to say. Put a stick,
well,
you're kind of limiting yourself if you say that, I'm only trading ICT, I'm only going to be trading this. If you keep on spamming the chat, I do have to I do have to ban you. Actually, you are, so I'll have to ban you. I'm sorry about that. Maybe he's used to troll. We do get these ICT trolls from time to time.
Yeah, I have nothing against the ICT.
Yeah,
or its
me
concept.
neither. I mean,
It's not the cure all.
I mean, he makes a lot of money selling courses, and that's cool. You know, go all in. You know, sell. I mean,
it's. I think it's from what the limited amount of content I've seen.
Seems like
it's cool. It's
yeah,
cool,
and it seems like he's winning the. He seems like he's winning the Robbins Cup as well. That's pretty cool.
Is he?
No, he's not. All right. Let's probably move on.
It doesn't matter how we call it. I will say just price action, and that's it. If you want to call it ICT, that's fine by me. I don't mind. But I wouldn't say it's ICT. I'm just.
I mean, order blocks work though. I mean, order blocks they work. They work. So if you wanna be trading order blocks and then use it as supply and demand, it definitely works.
Yeah. So all right. Let's see. What do we have?
Label. That's right. Label. That's what I'm looking at. Thank you. All right. Lelo, Paul, give me your TradingView username, and I will add you to the indicator.
It's a label, yeah. That's what ICT did. It labeled things that were already existed, right? Already existing concepts, and repackaged.
Yeah, and I mean
that's okay. I don't mind that.
Yeah, that's not necessarily a bad thing. I mean, what ICT did is like it took advanced concepts and then put a different name on it, a different label, and I think it's if that helps people understand trading and technical analysis, then that's great. That's great.
Yep, that's what I think too. And it seems to be helping a lot. A lot of people are trading and having good results with ICT concepts. So by all means, keep doing it. If that's helping people, I'm going to be the last person to say anything bad about that. But
yeah, and the 5ers. I mean, at the 5ers, we do have multiple funded traders using ICT, and they're quite profitable. So it obviously works. I would say that most trading systems, they work if you're consistent and you have a good risk management.
Yeah, I would even go to say I think I strongly believe this, that you can extract edge on just about majority of the strategies if you only follow the data, right? You include different variables and you look which ones improve your the strategy, and which one decrease the profitability, and you keep discarding those that don't improve it, and you keep try out different variables that will make it better. If you do that process, it doesn't matter what strategy you do. That way of building your strategy, you're following the data, the evidence. You can make anything. Well, not anything, but most strategy you can make profitable to some extent.
Yeah, definitely. All right, so I'm actually we're waiting for Alex to come on and start the giveaway. So I'm gonna try to get hold of Alex and get the link to the live stream and everything. So we'll get that all set up. And yeah, we have Giannis is also a funded trader with the 5ers. You know him. You guys know him. Been on the live stream. Probably gonna get him on again. And he trades ICT. And he's also very profitable. So ICT works. It's not like it works. Definitely works. Okay, so
I'm looking at a setup on EU.
On EU,
which is yes, on EU. There you go.
Yeah, we did. What's up, Alex?
Well.
How's it going, man?
Yes, it is extremely busy here. I've been getting my ass handed to me in the markets,
Yeah.
especially by euro. I did call the nice move though on USD CAD, but I didn't trade it. Wow, typical.
Yeah, that's a good one. That's a really good one. I was looking for that bounce.
Mate,
I
on
wanted it to
the
happen a little bit.
daily, it beautiful. Like you could just I
Yeah.
spoke about it
Yeah.
on the Trade Delicious stream this morning. Just the reaction was nuts. But
Yeah.
who's ready for a giveaway?
I think they're all waiting for you to get that going. So guys, remember to hit. We're at 570 likes right now. If we can get that up to 600 before we get this giveaway going, then we got six accounts. So make sure that you hit that like. We got about 30 likes left. How's your trading been this month? I think we have. So this is actually the last day of the month.
Yeah.
I think maybe tomorrow during the scalping madness we could talk about how our trading's been in April.
I did some back testing all while I was on a holiday. Instead of actually having a life, I decided to back test.
That's actually really good. It's
found some really interesting things about one of the return to the mean techniques that I like doing. You know, with the take profits to the EMAs and stuff like that. I learned a few interesting things on that strategy.
Yeah, I've been yeah, it's gonna be interesting. I think next weekend I'm gonna go through all my trades and do a like complete journal review. I think it's it's easier on the weekends when markets are closed.
Yeah, not just that. I use FX replay.
Yeah.
So I just get FX replay, do it as if I'm actually. It's obviously not the same, but it's closer to anything else. And then I just take that, put it into Edgewonk, and Edgewonk just, lays everything out.
So you can combine FX replay and Edgewonk. How do you do that?
Yeah. You just export the CSV file.
No way, really?
Yeah. Upload it. So
wow,
I did about a year.
Amazing.
I did about a year worth of back testing. It took me about a day to a year's worth of back testing. And then I figured out that Fridays it's not a day for me to trade.
Yeah. No, it's a good data.
It didn't need me to do back testing for me to tell me that, but for it to tell me that. But it's
that's good though. I got Fridays off. That's amazing. But yeah, that's I never thought about that. So we can backtest an FX replay and then can import that to Edgewonk. That's saves, very, very good.
Saves super amount of time, and it's basically the same as if you're actually trading. The same, results if you're pulling it up to break even, if you're doing all of that, if you're managing the trade, because it works the exact same. So it really does show you little details. And it's funny because the back testing actually showed me the edge that I have, like forward testing. It's the same kind of rough win rate and stuff like that. So I know that it's on point to my normal trading. It just shows that
that's great.
Certain days I shouldn't be trading, and then pre-market London I shouldn't be trading as well. I shouldn't be opening trades.
So we should definitely contact FX Replay. Like we should get some type of discount for people watching this. That would be cool.
Yeah, man, definitely. Yeah. Okay, I am posting it in the group.
Yeah.
In the group, not in the group, in the chat. I am posting.
Okay, so we have we got the link. The link is pinned comment. And then what's the code?
For this, I'm going to use a little bit of music. Okay.
Let's go.
Pump it up. Secret giveaway code. Pump it up.
Let's go. Pump it up. I don't know what we're pumping up, but with something.
We're both.
Let's go. Let's pump it up.
With a Bitcoin.
Pump up the like. Pump up the likes. Pump up
the likes, yeah.
Pump up my conviction with crypto, please.
Yeah.
Oh my God. It's one day in crypto you could be someone. The next day you're just the same as everyone else. My Solana.
Actually, that I got really interested in FX replay and edge rank now. I'm gonna check that out.
Yeah, super easy to do. The only thing that is hard to do when you're doing all of that stuff is really in the moment when you're coming in, you're going through, the daily, the 4 hour, and it just takes a little bit of time. You come in, you just do it really fast, and you can kind of get a sense of the market. You get a feel for the market.
I'm sorry, but I don't understand why people ask what the code is when it's right on the stream. If you're watching the stream, it should be very easy to understand what the code is. It's pump it up. And it says right here on the screen. Pump it up. Pump it up. One word. Pump it up. Pump it up. Pump it up. Yeah, okay. You were saying something. I'm sorry.
I also learned that I shouldn't be trading the DAX.
Yeah.
I actually learned that by taking a 4K loss in
a
funded account, actually. So.
Oh, the funded account. Shit. The 4K loss on the funded account.
Mate,
That's
messing up a little bit.
Position size, right?
Yeah. Don't laugh. I love the way that you laugh because you just know what I was doing, and it's we do make mistakes, so we just gotta.
Yeah.
Happens to all of us.
We gotta laugh our worries away, It's better than crying on stream. I mean, we could just go on here and start crying. Yeah.
Oh no, I do that as well, just not when anybody sees.
Oh yeah. Like probably like this.
Crying with a cigar in my mouth. Oh God, it's so good.
Yeah. Speaking of cigars, I got a delivery coming up. Go get a new delivery.
What do you think of those things that I sent you though? They're not any good.
What did you send me?
I sent you the Zin or something like that. No.
Oh yeah, right. No, like that's
it's supposed to be really good for cognitive function. Actually, maybe I should just ask Victor. Victor, maybe because I know you like you like all the nootropics and stuff. All the stuff
just nicotine, isn't
it? Yeah, nicotine's a nootropic though.
I'll have to come back on that for you.
Okay, I'll leave that with you. Yeah,
we're gonna ban everyone that's puts it in. We're gonna start banning people if you put it in the chat, and you're not supposed to be putting it in the.
I think they're bots. Maybe they're bots. I'm not sure.
Yeah, if they're bots, yeah. I'll just ban them. My trading month has actually when I started the month, I started with the low risk, and every profitable week I increased the risk with $50 to get to like a comfortable risk level. The problem is like when I started the month with low risk, everything went so well, and of course, like at the end of the month when I had added like $200 to the risk, that's when I had 2 losers. And obviously, when you have having those two losers being double the risk equals, that's 4 losers if you compare the risk to the first week. So a lesson I learned is, when I'm doing the analysis of this month, I have to focus on risk, the risk to reward ratio, and not the dollar amount.
Why,
Because
instead of doing the dollar amount, why don't you do the percentage amount?
Because it's also misleading, because going forward I will risk the same amount as I have now, so but I started with a much lower risk,
But you know what I mean? Like if you're always doing 10% of whatever you've got in, then it's dynamic. It kind of breeds, it lets you compound your winners, and also on the way down as well, it kind of saves you from making those big losses that take you back down from where you started. You know what I mean?
Oh yeah, I mean, I definitely, I mean, I know what you're saying.
I'm saying that
I agree.
I don't do that at all,
No, I mean, I know what you're saying, but oh wow.
It's like sometimes I say stuff and I'm like, wow, that makes loads of sense. Wouldn't it be amazing if I
Yeah.
just did
Why?
what I said?
Yeah. No, but I mean, what I mean is, like, if you have, imagine you start with a $100 risk, and then you're adding $50 for every profitable week, because for every profitable week you add $50 until you're at your right, at your risk limit, right? And basically that's because I mean, the drawdown, right? I'm currently in the drawdown on the funded account, and it makes if I'm going to continue that drawdown, it makes no sense to increase risk. So what I did was, every profitable week, every time I had a good week, I increase risk, right? And the idea is to come to a comfortable risk level, which I think I am at right now. So next month will be, I think next month will be a good representation of. But it sucks, it's a bit unlucky,
The way to do it, if you want to do it, is to size up slowly, because by the time you're double the size, you have built up some cushion, some profits, and then you're better able to withstand a couple of losses. If you do it too quickly, you're still don't have a lot of profit in comparison to that bigger size. So do it more slowly. Could be a way to do it, but I think it's a great way to come into the market, because your psychology changes, and you have to warm up your skills, so to speak. When you're at lower risk,
it's funny.
You tend to trade better.
Yeah. I mean, it's funny looking. I'm looking at Edgewonk, and I'll look at the statistics, and I'm up 5R, but I'm at break even. So it's frustrating, and I do the calculation in my head. What if I had the same risk? What if I had the same risk?
Yeah,
because
but
obviously
yeah, go ahead. Sorry.
No, you go ahead.
The other way to help you with that is, instead of thinking of your P&L, is to think of in R multiples. Because if you won, let's say you won 5R with lower risk, and now you are with a higher risk and you lose 2, you're actually still winning plus 3R. Because of the size you changed, your P&L is showing a different number, is showing negative. But the R is what really matters, because you could have done the same size all along, right? And looking at the P&L while you're increasing your risk is deceiving. So it's much better to look at the R multiple that you're doing, and if that gets negative, then you are not performing well. But as long as the R multiple is positive, doesn't matter if the P&L is negative.
Yeah, definitely, and that's definitely what I'm focused on, and I know that because I use different Because I use different risk in dollar amounts, then it doesn't matter. Like, it doesn't matter. I can't focus on the dollar amount because that's not a good representation of trading, because I've used different risk.
Yeah.
All right, guys, I think it's time to get the.
Should we do it?
Yeah, let's do it.
Okay.
There's high impact news coming up in 5 minutes.
Ooh.
4 minutes to be exact.
I'll get make sure the giveaway, everything's ready. We'll watch the news together, you know, like
Yeah,
all together. We'll watch the news and then we'll pull out the giveaway.
Sounds cozy.
Yeah, man. Let's get out the marshmallows.
The cigar.
The cigars.
The popcorn.
Yeah. Oh, at the end of this, I'm probably gonna have like a sweet stick. You know those like little sweet sticks, the long ones that you used to get. I don't know. Maybe you didn't get those. Those may have been an English thing, but we used to always think we were smoking cigars with these little sweet sticks. Maybe that's what I'm gonna have to go back to if I keep losing money in the DAX.
yeah. I remember I used to buy those chocolate cigars, and like
Chocolate.
like chocolates that look like not cigarettes, like chocolate cigarettes. So like chocolates, and they looked exactly like cigarettes. So I used to buy them when I was a kid, and then walking around, trying to fool people I was smoking, looking all cool, you know, being like 10 years old, walking around smoking.
Okay, we're just gonna do the giveaway. Fine. We're gonna do it. Let me.
Yeah. By the way, if there's any coffee roasting experts in the comments, DM me, because I want your advice. I'm gonna be buying one of these coffee roasting machines, and I want like the best one there is for personal use.
Well, you're going full India. You're getting the coffee machine.
Yeah, man.
You're going to be doing yoga. See you in Bali.
No, so I found this place where I'm able to get raw coffee. It's a really good quality.
Hold on, guys. We just got a little bit of an issue. Give me 2 minutes.
Can you win multiple giveaways? Well, I guess technically you can, but we're like, if we see that we have someone winning multiple times, we want to make it fair, obviously. So we want to kind of switch it up and give it to someone else. But yeah, I guess you can.
Yep.
What about
we did want to ask as well. Do we still want to be doing giveaways in this kind of way, or do we want to be rewarding people for, you know, doing a good analysis or something like that? What do you guys think? Do you think they should be more of a... I don't know why I'm going with this. I'm gonna just get the giveaway up. We'll talk about it another time.
You were gonna send out the... Yeah, maybe this is something we should talk about. Not live, but well, you know, obviously, like, if people have ideas on then absolutely, that would be good. Like, maybe I was gonna say something. Yes, you were gonna send out a form, right, for them to did you do that?
Unfortunately, I did not.
Okay, so yeah, because
sorry about that.
We did get some questions on that. Well, we have 677 likes. If you can if you can get to 700, we'll give away seven accounts. But that's you only have a couple of minutes left, so only a couple of minutes left to get the likes up. We need 20 likes, and you only have a couple of minutes left.
When is the news?
That's going to be in...
It is in 30 seconds. 30 seconds.
What news is it?
Get your popcorn ready.
Sit down. I thought you said CAD Euro popcorn. Yeah. Let's do this.
Oh, I thought it was gonna like, poof, you know.
There's no news. I can't. Oh, all right. We got CB consumer confidence pending. All right. What's news? What's happening? Let's go to.
I love that barcoding on euro. Great.
Oh, wow.
Lovely price action. Okay.
Now it's
I
moving.
literally
It's playing with the pivot point of today.
Not a lot of movements, is it?
No.
wow, that was very anticlimactic.
Yeah.
So we're just gonna go to the giveaway.
Yeah, let's do the giveaway. All right, we got seven likes more. And we got 700. So press that like button. Let's get that up to 700. We only have a couple of. Yes,
We
okay,
got literally-
four likes left. 4 likes left. Let's do it.
As soon as you got 2 seconds, 1, 2, tell me, 3. Oh, I've already said 2
6.99.
seconds.
6.99.
Oh, God.
Let's just do 7. Okay.
There you go. Woo! Confetti.
All right, congratulations. Oh, Syntesa. I know that guy.
Syntesa has already run. It's up to you, Syntesa. We're going to give it to you.
Yeah.
If you want
okay.
to give that, if you want to pass it on to someone else, because I know you won an account a couple of weeks ago.
Yeah,
Write in the
Syntesa
comments
has.
if you wish to keep the account or pass it, and I'll do a repick in front of everyone. Yes, you can keep it. It is not. You can keep it. If you write right now in the comments, I will keep it, then it's yours. But you can pass it on if you want. This is
If he passes this on, we have to like have to give him some sort of the 5ers Hall of Fame or something.
Honorable mention.
He
Honorable
takes it.
mention.
He took it and ran. So he's gone. So I'm out, guys. I'm heading to Bali. Screw this.
We'll give Syntesa 2 more minutes.
Yeah,
And
you're
if we
not
don't hit
like.
about 2 minutes,
Oh man,
then,
you can't repick
then-
now though. You can't repick now though. That's
No,
that's
I
you-
can't read.
yeah.
Okay.
No,
Yeah,
they're not cheating. They're winning twice because the loyalty points. Okay, and that's actually something we're gonna talk about. So every Tuesday, Thursday we have a meeting. You know, we talk about the live trading room and everything. So
Alan, this is very
Alan.
true. You do not understand the day I've had with so many stuff, and it has been. It's just. I'm gonna send you the link.
Syntesa
'cause
takes
he-
it.
Oh,
Congratulations,
he takes
Syntesa.
it.
Well,
He
that's
took it.
surprise.
He took it. He took it.
I don't know what Alex thought he was doing. Like, that's your account, dude. You're here
fair play.
almost every live stream. We love you.
Every life. Alan, he's the funded. Alan's actually going to be with us tomorrow, if I'm not mistaken. He's going to be.
No way, is
here.
this
He's the
Alan?
This is the Alan. So
Oh,
we've had
wow.
a couple of people that have passed the 250k bootcamp from the giveaway. Alan is one of them that wants to come on and talk about it. So we're going to have him on
Nice.
stream tomorrow. I'm going to get in the account sorted as well. And that's it. So there you go. Those are the winners today. Syntesa, the account is yours, my friend. Well done. Take care, everyone.
Awesome. All right, that's a good way to end today's live stream. So yeah, thank you everyone for joining us here at Syntesa. Yeah, thank you everyone for joining. And tomorrow is going to be one of those crazy live streams. Again, we're going to be doing live scalping. We're going to have a demo account. We're going to be trading the same account, and we're going to try to make as much money as possible, basically, in a short amount of time. And this time, we're going to try not to lose the account, and
It's going to be fun. I like those.
I'm gonna try.
I like those madnesses.
Yeah, and hopefully, like, obviously, Alex got very lucky last week, so
It's not luck,
this time around,
though.
well, you got lucky. You were on the right side, like. It went,
right
I saw your lots. I saw your lot sizes. I saw your lot sizes. That could have easily went the other way.
Another one. You know?
Let's see tomorrow. It's going to be a good one. All right, guys. Thank you for joining, everyone. And I hope to see you all in the next one tomorrow. Take care, everyone.
See you. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.